because we're 12 days from Election Day. Analysts at UBS are now saying that the midterms are shaping up to be a wave election with the tide turning towards Republicans. So if the GOP does grab a majority in Congress, what does that mean for your portfolio? For some answers, let's bring in now Mike Ryan, Chief Investment Officer of UBS Wealth Management. Mike, welcome to the show. I was reading through your note to clients here. I mean, in wealth management, you're talking to high net worth individuals. Really interesting to me that you don't necessarily think these Bush tax cuts are going anywhere.
Yeah, Margaret, I think what's likely to happen is that there's not going to be a political consensus on either extending all or some of the Bush tax cuts. So I think what we wind up going to see is we're going to kick the can down the road a bit. So what you're going to see is an extension of the Bush tax cuts for 1 or 2 years, and then Congress will take it up when we see the seating of the new 112th Congress. So this is more of a temporary issue. It's not a permanent extension of the Bush tax cuts, which is one of the things that certainly business leaders were looking for.
So what would you advise to clients then? I mean, it seems like we've been hearing so much about that rush towards December 31st, the expectation that taxes are going up. If that's not the case, what do you do now?
Well, I think what we're going to see is, unfortunately, we're still going to have this uncertainty about the tax code, because even if we get a 1 or 2 year extension, I think a 1 year is more likely, this doesn't resolve the issues about the ultimate change in the tax code. So it will help in the short term in that we're not going to see the immediate pushback to the Clinton-era taxes, but in the longer term, we're still faced with this uncertainty about what the tax code will look like 2, 3, or 5 years from now.
Interesting, because Larry Fink was on this show just yesterday, and he said we're going to wait to decide what we're going to do with dividends or share buybacks because we're not sure what's happening on the tax front. You think there's very little equity support or dollar support out of a new face on Congress? Well,
again, I would also say that, normally when we get these midterm elections, they're often course corrections. Normally in a presidential election, especially if it's a popular president, you tend to see fairly long coattails and there's an ushering in of the new party. Midterm elections are all about restoring the balance. So normally financial markets do pretty well in that environment. What's a little bit different this time around, Margaret, is that when you come out of the midterm elections, there's usually this fiscal push you get, the ramping up of spending heading into the presidential election, which I don't think we're going to get this time around. We're not going to get the same kind of fiscal stimulus that has carried markets in the past.
You don't think gridlock is good in this case? You're forecasting a Republican House, a Democratic Senate. On a global basis, you do see protectionism as a worry here.
Well, I'll take an issue with that. I think gridlock is good. What I think is not good is dysfunction. Gridlock is when we have that split and there's an even divide. Dysfunction is when they can't get things done. Like, for example, if they're unable to get through the Bush tax cuts, the extension of them, because this ideological split was in two parties.
And it sounds like that's what you're expecting.
Well, again, I think we're going to continue to see this partisan bickering between the two parties.
All right, Mike, thank you very much.